Good morning, good afternoon, or good evening, and welcome to the Monday, the 25th of November, Bull versus Bear webinar. Steve Miley here on the Call for Trader. Can I just get a sound check, please, guys? Anyone who's on, can I get a sound check, please? You can hear me okay? Before I carry on, I'm going to carry on anyway, but can you just say yes, you can hear me in the chat if you can, just because I'm using a new mic setup. I just want to make sure you guys can hear me okay. So we're going to go for our usual regular rub through in here today. Slight twist on a different twist on a Monday, in that we have we'll take a look at the shape of the week. So where the potential volatility points could come in as we go into the week. So we'll take a look at that shape of the week as we go through today. So first of all, we'll start with the macro matters and the macro summary. Remember, we post these each weekend. Usually come out on the Sunday. If you're watching this live, thank you, Rob. Sound all good. If you're watching this live, it will be in the three columns below where you're watching this in the members area, or if you're watching a recording in the members area. If you're in YouTube, then you won't see it. But below in the members area, we have three columns. Left-hand column is the technical analysis column, the middle column, the fundamental macro analysis column, and then the right-hand column, the news column. And if you look in that middle column, we have the weekly summary and the macro matters summary and the macro matters articles in here. So the macro matters, the longer version in here, going into more detail, and the summary, as it says, a summary. So having a look back into last week, stocks were up generally. We saw rotation, though. That was the main thing we saw in here, and we see in the US stock stage rebound and rotation out of tech. So having had some weakness at the end of the week before, 2 weeks ago, on the Friday 2 weeks ago, we saw a significant rebound. Dow Jones to a new record high, S&P 500 also up. But we saw a rotation definitely out of the big tech. Underperformance by NVIDIA in here, which has obviously been a big leader of not just the NASDAQ, but the S&P as well, to the top side in here throughout this year, and further back than this year, but certainly throughout this year. After NVIDIA results, even though they beat earnings and the guidance was pretty strong, the markets didn't take it too well, and they were slightly lower in here, but not significantly lower. NVIDIA down, and sort of just held back a little bit. The indices in here, to the NASDAQ particular in here, just held that back a little bit. But as I say, the Dow making a new all-time high. Google Flash PMI data missed expectations. We did have a slight beat in the US, but significant misses in the Eurozone. Increasing risk of an ECB rate cut in December now, a higher likelihood of that. And actually, European markets kind of like that. Bad data, good result in here, in the potential for an ECB rate cut. And going into this week, and we'll focus on this a little bit more as we go into this week, a relatively quiet, was definitely second half of the week with the Thanksgiving shortened holiday. So Thursday, we're going to send an email out a little bit later today, and we would let you know when those the opening hours are. But we have a shortened, well, basically cash markets are closed on Thanksgiving. So the stock indices, the actual equity markets, the stock markets are closed in the US. The bond market's also closed in the US. Futures markets are like partially open, so they're open for some hours, even on Thanksgiving, but not for the main session, like what you'd see is the core session during the day. And then on Friday we have a half day on the cash markets and a partial day also on the futures markets. You need to know when those times are, guys, because obviously the market closes are going to be different. And then obviously if you're holding positions over the market closes on the Thursday or the Friday, the different market closing times that we do have on those dates, then you're going to potentially fail the evaluations, lose your funded account. So please do be aware. We will send an email out later today. We'll also be posting it in Discord as well, so you're just aware when those closing times are. So please do be aware of those closing times. Looking into the week ahead, the main central bank event is the Fed minutes on Tuesday, a different day because I think as the Thanksgiving holiday. Also, we had the last meeting was a strange day because of the US election. So the US election moved the last meeting that we had back in November, earlier in November, beginning of November, and then the minutes also moving because of Thanksgiving. So the minutes coming out this Tuesday. Remember, the minutes are one of our 4 embargoed trading where you can't trade over the minutes in here. So no trading 2 minutes before or after the release of the minutes on Tuesday. Again, an email will be going out on that today, so watching out for that. No trading 2 minutes before or after the Fed minutes on Tuesday. The main macro data of the week in here. So we got very little out today from the US side. Anyway, German IFO we've already had this morning. We get the Fed minutes on Tuesday, and then US consumer confidence. That's obviously important. The real main data, though, is going to be the US PCE data. We get that on Wednesday. And remember, that is the Fed's preferred measure of inflation. Wednesday's data are going to be the most important data we have. And so we're certainly going to be watching that. And then to say Thanksgiving holiday and a shortened Thanksgiving partial holiday in here for both cash and futures markets on Thursday and Friday. So watching out really for consumer confidence tomorrow. And the Fed minutes, obviously, and then the PCE data, the US PCE data on Wednesday. So very little today. So probably a fairly quiet day, although we've already gapped higher today, and we'll talk a little bit about that going on. If you want to read into more detail, check out the summary on the macro matters below you. So looking at today, as I said in here, you've got very, very little in here out today. Actually, if I go to the... should be able to see the IFO data, which was already out this morning, where we had German business IFO. You can see a slight miss. It wasn't a very big miss. It's important data for the Eurozone, important data for Germany. A slight miss, but as you can see, nothing of real note in here coming into today. But we have had the big news in here, kind of the overnight news in here. Scott Bessent's appointed as to the Treasury. That's calmed markets generally. Basically, an insider. What I mean by an insider, he's a hedge fund manager by trade. And the market's seeing that as potentially dampening down the more extreme potential measures coming from the Trump administration. So maybe I want to be, say, non-political in all of this, but maybe some of the more extreme things that could have been done, maybe now won't be done on the economic side. And the market's taken that as a relief, okay, that someone who's kind of in the know, understands markets in here, is taking the helm of the Treasury as Treasury Secretary. So that is seen as a definite positive for the market. So we're seeing basically equities up. Equities are gapped higher in here this morning or overnight, and we've seen in here also bond yields go lower. So bond prices up, bond yields go lower. So, and then the dollar's down on the back of that, and the dollar's down because of the lower yields in here. So certainly seen from the markets as a big thumbs up. There's some stuff in here on COP29, but it's not really going to impact directly into the markets in here. And potential Israel ceasefire with Hezbollah in Lebanon within days, but we've heard this before, right? So we're not going to hold our breath on that one, I don't think. But that would be a positive, obviously, generally for markets. So stocks, bonds rise as traders cheer Treasury pick. As say Scott Bessent expect to take the more gradual approach in here, sort of like a bit more like the voice of reason in here. So maybe calming down some of the more extreme measures potentially coming out of the Trump administration into next year. Dollar falls as traders bet Bessent will dilute extreme policies. Exactly what I've been saying there. So dollar drops, notching longest weekly rally in a year last week in here. So it was at multi-year highs actually for the dollar last week. But Bessent's seen as an antidote to some of Trump's economics views. So not as extreme. Remember, the markets like stuff to be more conservative. Yes, they want Trump to be. They want Trump to be, if you say pro-US, the markets like that. The markets maybe like Trump being, anti-trade in some ways. In that, if it's good for the US stocks, US stock indices like that, pro-economy, pro-business. So those are all seen as positives. But as I think even Trump supporters, would be. Willing to admit some of the policies might be a bit too extreme. And then for the markets like more stability. So this is seen as Bessent in here, maybe dumbing down, maybe not the opposite of throwing fuel on the fire, taking fuel off the fire. So Dow futures here on a new time high again on the back of that as well. In here this morning, gapping higher, dollar dips with Treasury yield. So all the same things in here from Reuters. World stocks, bonds bounce and Bessent pickers next year. So all see those seen as a positive. So on the overnight, you see the Nikkei was up 1.3%, slightly down though actually on the Nikkei on the overnight. European stock indices slightly higher in here. The French CAC is unchanged, but the German DAX and the UK FTSE up about 0.2. And on the overnights on the US futures, you can see Dow Jones up 0.6 in here to another new all-time high. S&P up nearly 0.5%, and the Nasdaq up about 0.5% as well. The Fed Watch tool in here is interesting. This is, we spoke about this continuing to slide. It was up in the 60s, 70s only last week. Now we're in almost at 50-50 whether we get a rate cut in December or not. 50-50 chance of a rate cut now in December. If we go at the end of Q1 now, market pricing in most chance in here for, still looking though for 2 rate cuts. The biggest chance, I'll repeat that. Only looking for 1 rate cut in here. So 60% chance of either 1 rate cut or no rate cuts by the end of Q1. So still only now looking for 1, likelihood is 1 rate cut. And if we go out into the summer, in the trough in rates in here, very much only looking for 2 rate cuts for next year. So here you can see down at 400, 425, where it's currently 450 to 475. And if we go out to the end of the year, sort of even Stevens between 1 more rate cut maybe by the end of the year. So troughing rates coming initially in the summer, and then potentially, but the market's still kind of betting more likelihood on 2 rate cuts rather than 3 by the end of next year. And as we said in here, bond yields in here are slightly lower in here this morning. So we're kind of that's where we were end of last week. Gapping lower Sunday through Monday in here. So looking to push to lower yields, higher prices, lower yields. The actual outlook, though, if you look in here, it still remains very negative on our market chart's technical views in here. You can go and take a look at those across below where you are, so right now in that left-hand column. Market's kind of marking time more recently, but US 2-year notes were actually going to lower prices, higher yields at the very end of last week in here. Although I've probably seen a slight reversal of that going into today. But then equity markets in here, the equity indices in here, we're sort of saying slightly negative, but just staying bearish on the Nasdaq, and with that push higher, really flipping to more bullish now. The S&P will stay bullish throughout. The Nasdaq had a slightly more negative, bigger sell-off in here a week and a bit ago, but the amount we've clawed back, we're on the verge of flipping to more bullish in here anyway. Staying bearish just as rebound still limited, but the gap high this morning really flipping us to a more bullish outlook. And if we take, I was logged in here, just bear with me. Obviously kicked me out. So if we look on here, you'll see the gaps higher this morning. So that's definitely setting up. We've seen all last week was really dipping a rebound, dipping a rebound, dipping a rebound, dipping a rebound. For much of last week, 4 sessions from Tuesday through Friday, dips and rebounds, and this morning gapping higher. So the ES, the S&P now not far off the all-time high. The Dow is actually at the all-time high in here. And that gap, if it holds the gap in here on the open today, looking for potentially further upside. We might even on the S&P challenging there, the high, that's up at 60.53 and a quarter. So even though we've got no real data in here, I think that the news in here, the best of news in here, is certainly going to be potentially enough to take the S&P up to the all-time high. If we take a look at the Nasdaq in here, not quite as positive, but that's enough for me. I think we've taken back that sell-off from 2 Fridays ago. That big sell-off, we're basically back up again, gapping higher. If we can take out that peak there and hold above that peak, the high there, 20 from 2 Fridays ago, 29.81.5. We can get a 21 handle on this. I think we could see a significant push up towards like 21,200 going into the day. So definitely potential upside on that Treasury pick from Trump and going into today, even though we've got no real kind of news, no real driver in here. And then all focus then obviously going into Tuesday, we'll switch to the Fed minutes and consumer confidence. And then Wednesday, we'll be looking at that PCE data before we run into the holiday Thursday through Friday. Watch out for those emails, guys, regarding the emails regarding the non-trading, the 2 minutes non-trading before or after the Fed minutes. Also, the holiday time closing. Make sure you know when those holiday time closings are through Thursday and Friday. And also, you probably saw we put out an email there. We're going to be running a Black Friday sale towards the end of this week. There'll be more details, another email going out. It'll be our biggest ever sale. So please do take note of that. Biggest ever sale. There'll be more details on what that sale will be closer to the time. That will not go live until the end of this week. I think we're going live Thursday night, Black Friday, just before Black Friday, actually for Black Friday. So midnight on going into Black Friday through from Thanksgiving. So watching out for the announcement of that sale. If you want to sign up at our best rate we've ever going to have offered in here with our biggest discount. So yeah, watching out for that later in the week. All right, guys, I'm going to wrap up there. I'm going to wish you all a great trading day. How was the sound, actually, guys, compared to the guys use are on? I've got a different setup in here. Is it better or worse than usual? Can I just get a bit of feedback if anyone's watching live in here? Give me some feedback. Can you buy a sale trial whilst people? No, you can't, Rob. You can only have one account at any one time. You can't. So if you're funded, you can't buy an evaluation. Sorry. Sound, no difference on the sound. Okay, that's good to know. Okay then, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. Duncan or I will be back for you tomorrow for another bull versus bear webinar. Take care. Bye.